Okay, what's going on? Grand Rising. Today is Sunday, February the 16th, 2025. And what we're going to be looking at today is a little bit of the dollar index, a little bit of the futures, right? Just some updates on some of those trades. And then obviously our NAS 100 swing trades, right? So if you haven't, go back and check the videos from this week if you want to see some of our live trades when it comes to futures. And then this session and going forward, right? These sessions on the weekends will be more for updating you on where I'm going to trail my risk, right? When it comes to the NAS 100 trades or whatever I'm, trading long term, and just some key takeaways from the week, some things that I learned, and then some things we can look at going into the next week. All right. Now, what I'm going to do, just so you guys that haven't followed me for a while, is this week my goal is to really work hard at each day that we finish a futures trade. I'm going to do a DRC video breakdown. So every day, um, with this, I personally usually do a DRC where I answer, three questions that I think have completely changed my trading around. And I think that if other people were to utilize those and to ponder on those questions, that they could start getting the answers that they're seeking. So, okay, so what we'll look at first here is really quick, just make it pretty easy. Is if you've been trading with us for a while with smart money concepts, if dollars going up, we want to be looking for the assets that we're trading to be going. If dollars going down, excuse me, we want to look for the assets that we're trading to be going up. So with everything going on, we were looking for more of a bearish week, and we continued to get that from the market open. And so by seeing that, that automatically put me in a position to want to start looking for long positions. So what like I said, like what I'm going to do is each day on the futures positions, I'll go over each individual position and show you guys how, I could have worked better or it could have, whatever it could be for that day. But like I said, this will be just for more of the swing trades. Now, I take the very same trades, right, on futures that I take on CFD. It's just the difference is because of fees and because of just the access to this type of broker. You can actually carry those trades over, which I think is really good because you're actually putting yourself in a position where it becomes passive, right? You start making money in your sleep, etc. So, not going to go too much into dollar today as much as we do through the week. Let me go ahead and switch you guys over to the screen I do want to show. Now, like I said, next week you will be able to go through, each one of these individual trade days where we live trade futures, and where we actually take these positions when it comes to CFD. So, let me move this here. And so a lot of that will start to make sense, and you'll start to see why we do the things that we do when it comes to trailing our risk, and you'll start to see why I believe personally engineered liquidity from trailing liquidity really matters when you're looking at the markets. Okay. So really quick, just looking at the overall higher time frame, we're already looking for, like I said, more upside on the market this week. When you look at the actual open, though, the one thing that really mattered to me was how the market opened. Now, this Monday, for example, right? I didn't trade this Monday, so I took a swing trade to start the week at market open. I'll kind of walk you guys through how that worked out. So when you look at how it all played out, the market open was, I believe, for here this week was right here. Now I was getting ready to head to Oklahoma to help my mother with something on Monday morning. And so price opened here as a 6 p.m. Central Time Zone. Price opened here. And what my eyes were seeing was one that we gapped down from that previous week, right? So we started at, like, let's just say hypothetically on CFD pricing, right? And the locations are going to be the same on futures, okay? Now we started the week off at 21,500, and then the gap down was all the way 100 points. So you're telling me, we closed the market at 488 on a swing trade, right? Maybe you had your risk here, whatever it could be. Who knows? You're just trying to like swing that to the next week. And then what'd you do? You got gap down 100 points. Now, most people were like, oh man, the markets are dirty, da 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 da. But to me, what all it was, when you're looking left, right, you have this down candle here that we like to look at. to that previous high. So it was a perfect retracement to the area you can anticipate to happen. Now, are most people going to take this trade right here? Probably not. And on futures, I'm not going to take very many trades outside of that 8:30 window. But what I did do is I put a small position around the 406s right here, and then I was able to place my risk at the low. And obviously, every 15 to 5 minute candle, we continue to just rally. Going into 2300 hours for me is going to be 11 p.m. at night. So I like to see where it's at right before I go to sleep. So 2300 hours. If you took the 406 entry, you were already up. If you guys can see how I have my chart gridded out here, 100 points, 200 points, you were already up about 200 points times whatever volume you had, right? So I started off with about $4 in volume on that CFD position. And what I ended up doing, because I did it in two and two, is I took the risk of the original trade, right? So I had $2 still here, and I took the other $2 trade, and I trailed its risk to the top end of this imbalance, okay, just to kind of secure the bag. Now, as you can see, when I did that, that left me with, my position here, and it left me with my break even market open position here, okay? And so overnight, obviously I'm not paying attention to it. Give me 1 second here. Online. Introducing McAfee Flip. Okay, so overnight, obviously, I'm not paying attention to it. And then that next morning, I wasn't in my normal element of like, sitting at my desk and being able to really look at it. So what my day ended up being on Monday was I had a trailed risk. I had a really nice trade here. And as I was in the car, I was telling myself, when we opened up New York, which would have been right here around 21,650s, that I was willing to give back a good majority of my highest position, the one that I had trailed, right? If we got to the supply and could not break through. Right. So what I ended up doing with that trailed risk, like I showed you guys here, I continued to trail that as we expanded higher and higher, and then eventually it took me out in this area, right? But now remember, I still had $2 a point from market open, right? Before all this stuff over here happens, right? Before Tuesday, before Wednesday. Now, what I believe when it comes to liquidity, right, is the individual that took this market open buy, right, they've trailed their risk to secure the bag, right, either to this 50% mark or to the mark that I showed you guys, right, because they don't want to give back, 100 to almost 150 points. That'd be pointless, right? Literally. So what I started to see, right, when you start to look at this before you look at Tuesday and Wednesday, what I started to notice was at this exact moment, like I said, I trailed the risk. I had this position here I was willing to keep until break even. And I realized at this moment that we weren't going to break the 21,800s. Okay. So now you're starting to go into that new day of Tuesday. Let's fast forward now to Wednesday. So you can just kind of have an idea of what I'm saying here. So now this was all Tuesday. We ended up taking positions. I'll show you guys here as well. I was at my laptop that day. I was able to take the trade. And I do believe we posted that on YouTube, right? The actual trade, we ended up seeing a capitulation down, right? 8:15, the market started to set that right side of the V, and we were able to find positions from this area here, right, on the right side of that V, and then we were able to exit some of those positions in here, right, or trailed our risk up before the market came back and took us out for a win that day, right? But because of how we're positioning our risk and we're doing it this very similar way every time, we're able to execute and move that risk as well. Okay. So that was our Tuesday position. Price rallied. I mean, you can't go wrong with that. 21,620s, right? You're looking at 21,760s. Let's just say 750s to that gap is where we were really looking. That's a pretty nice move. Let's just say 600 to 7. You're looking at about 150, 120, like somewhere in between 125, 150 points on a blast like that. And you can't go wrong with that. So just kind of give you a visual representation. This is what I do each week on the 1 hour, right? I took buys in here, right? My trade was done and it came back and I was already out of the markets for the day. Okay, so I want to make sure it shows up on both just so you can kind of get an idea on that left side. All right, so we took our trades right in here, right? So you can see where that location was. Really, really nice demand. We were wanting to see technically if we price was going to continue higher, giving us a chance to trail some risk and to continue to build this position on a higher time frame. So that's what it looked like. Like I said, we didn't break through the 21 21 8. So at this position now, this is what it kind of looked like. Break even, some risk from the $2 $4 position that's broken into two. So $2 break even, $2 basically is risk right here. And then took another position Tuesday, right, where I was able to partial and then the rest came back and took me out. So this one in this area, I have no sitting positions at this point. All I have is the market open in that position at 21,563 trailed risk. Okay. So now you can anticipate a move like this. Now this is Wednesday, right? Now here's one thing I will say, and we'll go more in depth as we make more videos. But news is the excuse to push price to hurt traders. Okay, so when price is gonna extend down to these expansion levels, these imbalances, these fair value gaps, these whatever you guys want to call them, um, they're gonna run to the areas that's gonna hurt traders the most, and they're gonna run to areas what I call demand, or not what I call, but supply demand, right? So it's a thought process. If I have a trade here, like I said, I trailed the risk up. I'm kind of weathering the storm, and then I can't anticipate something like this. Now, as soon as this candle happened, this was 7 to 8. So the 7:30 news always comes out here Central Time Zone. Usually is their reason. Like I said, they'll push price to hurt people. I told people in my mastermind group, right, and we will have the Discord up ASAP, right? I told people in the mastermind group that if price falls like it did, right, we would anticipate the 50% fill of the weekly open candles. Now, guys, I'm just showing you guys NQ, and I'm keeping it simple today. But what I want you to understand is this happened across the board. Okay, this happened with ES. This happened with YM, et cetera. Right? We were looking at that 50% of that first candle that opened because of that thought process. The person that doesn't have risk reward or trade management, they take this trade and they just let it go, right? They don't trail the risk, they don't break it apart, whatever. But now what I want you to think is the individual, right, that took this trade and is holding it. Like I said, if they had to trail this risk, they're securing the bag. If they trailed it to here, they're securing the bag. Now there's also the person, right, that hesitated right here, that never took the trade, and then they waited for confirmation of a higher price, and they started buying it in here, right? And so that's why these individuals get yerked because they become what I call internal liquidity of the week, right? So this trade is short-lived, didn't give us a chance to trail up to secure because we never got the break of structure. Just kind of want to point that out again. And then, right, you have a low on the week, right, which would have been here, and you had a new high on the week, which would have been here, and this was previous week's high, right? Because that last Friday is high. So what I was anticipating is that this is another thing we'll go over as we keep going. But as the market approaches highs or lows, individuals start to panic. Individuals start to capitulate in their emotions and in their executions, right? Especially if they don't have a plan. So as price started to fall back on people here, most individuals at this break of structure, at this 50 break, right, they start to sell the market down thinking that it's going to go destroy the low, right? But that's where they trick most of the masses, right? Right before, like I said, they get to a major low area or a major high area. So why were we looking for buys in this position? Well, for me, what I wanted to see for the shorts, for example, is if they were going to go and close below this liquidity and capture it, then they were going to take the liquidity of the market open traders, right? But since they didn't, right? Since they didn't, what ended up happening for me on Wednesday was I sat through this, right? I love to watch the 7:30 news, I like to see it play out because that's where my favorite play happens, right? A lot of traders, I don't know if you guys use TradeZella, but something I'm going to start doing is, give me one second here. Okay, so something I'm going to start doing on TradeZella and inside another mastermind is I'm going to start uh, showing you guys, the breakdowns of the exact trade. Give me one second. Sorry, man. Okay, sorry. So when we're looking at this, we talked about the child risk, we talked about this. So this was Wednesday, okay? So now when that news releases, what I look for and what's one of my favorite plays that I'm developing in my playbook is what's called capitulation bounce plays, right? If you guys haven't looked up Lance, I talk about him a lot. Breinstein, right? He's a 10-figure earner. He's someone who's worked at a prop firm, et cetera, right? This guy really goes over what this RSV stuff really is, and I'm going to try to make it even more simplified for individuals, right? But price capitulates out, so massive fall. People basically, the word capitulation is people giving up, right? So people were giving up at this point of the week because they didn't know if they were going to get a profit because we weren't breaking higher. So price capitulates, takes the internal liquidity, but falls right to where those trailing risk players were. Now, not everybody is going to have the ability to stay break even here or even the emotion to do it, right? Because they're just going to be like, well, I'm already out, right? But my mentor, Jordan Morgan, showed me this, right? Was that you want to start playing where weak-handed players are, right? So if they've been holding all week and they're sick now because they never did anything, this is where they're going to get weak-handed and markets reverse very quickly when people after capitulation and people give up, that's when the markets react really quickly, right? Because think about the process. People were short selling here and price never broke the objective low. So what did they do? They covered. And what happens when they cover, right? They have to buy. Right. So just take a second and think about this, right? When you short, let's say you shorted this position and you kind of got lucky, right? You got the structure break, you're able to, close down some profits, etc. But what happens as soon as you want to take profit on that short position in futures? You have to put a buy order in to get out, right? And so that's something that was game changer for me in my journey when it comes to my NAS 100 swing trades. So, like I said, in Wednesday, we don't have this trade on the board. We're still holding the $2 here. I took a small L here, playing before the right side of the V, right? It was about an 80, almost $100 loss, I believe. And then I took another trade in the sweep of my risk, right? And that trade ended up carrying, right, and continued to rally, continued to rally. And until we actually broke higher right here, close to, I think it was the end of the day, I had started to trail the risk up. Like we went higher, 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 low, higher, 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 low. We pushed again, and I trailed most of my risk to this top end of the imbalance. And then the rest of the day just continued to go, right? Now, as we got into the supply, I had a $4 position here, right? As we got into the supply, I don't know if we're going to break higher or not. So I shaved half of that position, right? So I ended up securing, $2 times, let's just say from this level, for example, but it was from here, but one, two, three. So I ended up securing about 300, about 275 points to this area with another break even, with also the market open break even. Now, let's look at how this ended up going. This day ended up, pushing up, making those new highs, finally taking out those short sellers, right, from Monday and Tuesday. And then as price continued to rally up, it kind of toppled over in that overnight. Then you had London open and price never broke that 21.7 and continued to rally. Now, on my day trade that I had left from here, right, I left one break even. And then I did the same thing I did before. I trailed my wrist to here. Okay. Now, as you can see, because I trailed my wrist to right here overnight, it came and took out half of this trade, right? So then I was left with $2 here and $2 from the open. Now, one thing I do is when I take a trade, I usually trail my wrist to that next LOD, right? Now, like in this sense, I had this trade. We ended up, printing Tuesday and we finished Tuesday and now we're starting Wednesday, right? A lot of the times I'll trail my wrist to right here, right? But for this trade, for example, I had a feeling because of how it was engineered, I had already took partials on that Monday around noon that I could leave it break even here. Okay. And so now that I have this trade, I have this trade. When this price actually extended up here, like this, like you can see it on a line graph for that swing trade, that's when I started executing moving the risk. So I moved that market open trade to this low, right? And then I took the Wednesday's trades that I had on the board left that I didn't partial after we did, because we came up to supply again and we kind of failed to do it. And I had other stuff I was going to do that day. So I ended up partialing there, right? Paying myself there, making myself available if it came back down, and then leaving my runner. Okay. So now I have like that and that. And so we make this new high, we set this new down candle. But what do we do right here? Right? We made new highs in that new New York session on Thursday. So what did I do with the remaining risk? I took the risk from that current LOD, and LOD stands for low of day. I took that risk and I moved it to the new LOD, right? I took this risk that I had from the market open, I had moved it here, right? Now, price continued to make new highs. And then now I can go into Thursday, and you guys can go on YouTube if you want to see that position um, that we took on Thursday. But we ended up taking, I believe, yeah, we ended up taking the buys off the 1 hour demand candle, right? So New York Open was somewhere in here. Price was like it started to extend up. It pushed down a few times, and we were buying off of this area, if that makes sense, right? So we were buying off those 21,776s, and we were looking to go left, right, to take more liquidity as you go here on that 4 hour, right? So we were looking for more prices to eventually reach up on that 4 hour and continue to go left to eventually get to where we got. So yeah, so they manipulated people as well here. Now, the one main thing I liked about this trade when it came into you're looking at like Thursday is overnight they left the HOD here, and it was such a trash looking price that it was almost like they for sure once they set this candle and they was not going lower than 21.7 that they were setting a demand level in this area to at least take out that HOD. Now I didn't know if it would run and continue on that 4 hour daily, but we were at least being able to secure a profit if we could get out of this area above that HOD. Right. So now I'm going to plot another position so you guys have an idea of where we took those buys. And like I said, if you want to fact check me, you can go on my YouTube. I drop all my live recordings. Okay, so I know our position was inside of this 1 hour down candle. And so now price rallies and makes a new high, and it ended up coming back and taking us for a small partial that day, I believe, is what happened here, right? So we had a small partial. We didn't have a runner in this situation, right? The only runners we had were lower in the range. And so now all of our dollar cost average was pretty much below 21,500. And we were wanting to see if price can continue higher, right? We did make a profit here. We were able to partial just like we normally do. And then price on our remainders just came back for the trailing risk that we had. And so now I kind of want you guys to understand what happens now. So for that trailing risk from Tuesday, or from, excuse me, from Wednesday and this area, this went to here, this went to this low, right? This day finished. And then on Friday, what happened was there was news that was going to be coming out. What I anticipate on a Friday is that, if you're long on positions like I was from market open, eventually buyers are going to take profit and you're going to see that breakdown. But if you come into Friday morning and you look at 5 a.m., 6 a.m., they had already set a low and started to do a very similar thing with leaving that HOD open at Asian liquidity as they did the day before. You guys see how that 1 hour looks? Then they wicked off the area and then eventually go higher. They did the same thing the day before, right? So for me, what I ended up doing is as soon as we closed higher here, you guys see the technical close, right? On those swing trades that were moved to here, right, to this new set low on the line graph, right? Now that the market has given me a new set low, all I've done is just trail that risk on that runner, right? And that's securing, let's just say that's a little bit more, but hypothetically, right? 21, 5, 6, 7, 8, 9, and then 22. So now we're looking at about 500 points trailed risk, right? Passive income is when you can sleep and make money, right? This is where, if you find these great positions, you let those runners run. These are the type of things that can happen. And then as you continue to snowball and build into a massive position, price will extend and just take out liquidity and put you in a great position. Okay, so I hope this helps when it comes to, how to trail your risk, understanding, how to break down your week on that 1 hour and just understand the location of trades and where people are getting trapped, right, inside of, internal liquidity, trend lines, and the retail patterns, right? And yeah, so that's kind of what I wanted to show you guys. It's kind of like what my week looked like. Like I said, if you want to go and look at each individual trade, you can go in and do that on the videos that I've dropped. And then, like I said, this week we plan to get a lot better with the DRC right after the trades, and then following up each week with an end of the week overview like you see today. So last thing I'll leave you guys with is just a little bit higher time frame, right? Weekly, daily, right? And what we've been looking at. So we've been looking at this supply candle here, December 16th, 2024. And as you can see at this exact moment, we did finally sweep that area, right? We did sweep that wick area, showing signs of strength, which is pretty crazy. And then one thing I want to show too is just when you really start to plot these locations on the lower time frames, understand that the markets are fractal, so they're going to show up on the higher time frames in very specific areas. So when you look at, one thing I want to tell you guys as well is, when it comes to location trading, is there's two things, right? One is that the concept of trading is buy low and sell high, right? So you got to understand and have discernment, understanding what low and high is, um, and that takes time. You know what I mean? But that's one of the biggest things I would say is it's buy low, sell high. The other thing is, hold on, I just want to show you guys in here is the cliche thing that traders say is cut your losses and let your runners run, right? So one thing I say when it comes to swing trading and just trading in general, right, is cut your bad locations and let your good locations run and then trail them based on structure like I showed you guys, right? So you guys can replay that, but basically what I said was is cut your losses in bad locations, right? So essentially, or protect them, right? So this location based on the weak low and we had a weak high, I knew the range had been created, right? So what I mean by this is I would rather have dollar cost average wise, I'd rather have lower cost entries, right? And be less risk or break even on an entry like this and break even on entries down here. But what I'm saying is like the lower ones I want to secure so that when I'm showing you guys the market gives and I pull and take, right? As the market gives me those down candles in the uptrending market, I'm able to, trail that risk and take more, right? And it's just all about, like I said, managing the positions I think personally that are lower and the ones that are higher in price. Those are the ones that you're least likely to what am I trying to say? The ones that are higher in price, like I said, they're it's the dollar cost average, right? So you can really manage these from a long term perspective, and this is something that you can maybe trail up, and if you see a massive expansion, you can start to secure it because your entry is a lot higher here. So don't want to confuse you guys, but I think it was a pretty good week, and then looking forward to. Like I said, the next week, there's not very much I can just come in here and say, oh, I can just see what's going to happen just because of the fact that we finally have made new highs on the market. So maybe we'll see some profit taking, right? You think about 4 hour positions, right, that we have here off of this demand 21,400, and then a lot of manipulation between these weeks here. We'll see. We'll see what comes out. But last thing as well is going to be that dollar index, like we said. We came down pretty good last week into this weekly demand candle 50% fill, and we've continued to make daily lower lows and lower highs, and I feel like we're making our way down to that 106.50. So unless we open up and just completely turn around right here and start to build candles back up into that 107.50 and rejecting this 50% of this weekly candle on dollars. So for example, I just kind of want to show this. All right, so if it starts to reject around this 50% area like you're seeing right here, there could be possibilities of a small retracement, et cetera. But I think since we got the demand candle smacked right end of Q4, end of Q4 2024, and then we just rallied from September, October, November, December until we just blasted those highs. I think we could see some profit taking on positions when it comes to like weekly, looking at it from four phases: accumulation, markup, and possibly price distributing to mark down to 105. So we shall see. I'll also start doing crypto videos this coming week, kind of just going over like things that I'm personally holding or just ideas that could be could have potential. But with that being said, I hope this market overview from last week does help you out, especially when it comes to NAS. If you have any questions when it comes to like ES, I can also go over those and how I would trail the risk and stuff as well. Because at the same time, which I'm not going to go over today, but at the same time I'm studying these prices on NQ, I'm just like a hawk watching ES and as well as YM, all right, and US 30, whatever you want to call it. So. Again, appreciate you guys. Remember, we trade live Monday, Wednesday, and Fridays for New York session. And trade safe this week. Have a good one.